I'd talk about it. I think it's, like Dusty said, it is, one of the most important things on that we can use as traders to identify where we should be in trades. I always if somebody ever shares a chart with you and it doesn't have support and resistance on it in some form, you should probably quit looking at that person's charts.
That's an interesting piece of advice. I've never heard that, but it actually makes sense. All right. Yeah, just a reminder of where we're at. This is the fourth lecture in the beginner's course series. So we're about a third of the way through at this point. Like I've kind of been covering in the last couple of lectures, it's only going to continue to get more and more complicated. So if you missed the first couple lectures or you feel like you're lost at all at this one, definitely just go ahead and throw your questions in the chat and we'll make sure we'll get to those. But outside of that, support and resistance is mostly a reasonably basic concept, I'd like to think. So we should be able to give you guys all the detail you need to keep you moving successfully throughout the rest of this course. I won't recite the goal because I think a lot of you guys have been in a decent amount of these beginners lectures, but there it is if you were looking for a quick reminder. And with that, just kind of last couple things. Tonight I'm joined by River, so a little bit of a different flow that we'll probably go for with kind of two people running the class tonight. So you might notice that. We might switch back who's sharing the screen and kind of start covering different points, but I'm sure you guys both know or all know River, so no introductions really needed here. And yeah, let's get right into it. So starting off, let's define some of the terms that we're going to be talking about tonight. And there's really only two of them: support and resistance. The way I like to define support, and this is not really a definition from Google, but mostly just the best way that I thought to define it, is a level where buyers are prompted to purchase a security. And resistance is a level where sellers are prompted to sell a security. And I kept things very vague for a reason. And River, you can feel free to weigh in on this point too. Generally speaking, support and resistance is a concept that applies to many different assets in different ways. And not even assets, but even things like crypto, the futures market, even sometimes the derivatives market, like in the options contracts, you can see this kind of concept in play in some form. And the important thing to note is, very generally speaking, all support and resistance are key levels. It's levels to pay attention, levels where buyers have stepped in the past, and levels where sellers have stepped in the past. That's really it. And this kind of definition is a more complicated way of saying that. But yeah, River, anything else to add on that and kind of the definition of the support and resistance? Cool. So the question that I always like to ask at the beginning of this lecture is, why do they buy and sell, right? We're able to
Sorry,
identify.
I was muted, Testy.
Oh,
That's I didn't realize it.
okay.
That's my bad.
I was like, all right, that's one way to say it. You don't have anything to add.
That's my bad.
Sorry.
That's my bad.
Sorry,
I'm
go ahead.
unmuted.
No, go ahead.
I was just gonna say you're exactly right. One is where you want to buy, one is where you want to sell, one is where you don't want to buy, and one is where you don't want to sell. Don't buy, don't long resistance. Don't short support. As simple as it sounds, that's what we teach all day, every single day. Is quit buying the highs and quit selling the lows. And support
100%.
and resistance is how am I buying calls at the top or am I buying puts at the bottom? Support and resistance is how, if you listen to any of us trading voice chat, me, Flips, Nando, whatever, those are the places we are telling you to buy and sell.
Yep. Yeah, 100% agreed. And yeah, like I said, the question that I like to ask everybody kind of at the beginning of these classes is, why do these buyers and sellers, why are they buying and selling at these specific points? And you don't need to have the answer to that question, but I'd like to see if you guys have any guesses as to why people might buy and sell at these specific levels. Anybody have any ideas that you could maybe throw in the chat? Adrian says volume. Sure, it's a good guess. Any other guesses? To gather profits, psychological levels, liquidity. Yeah. Yeah, those are all super reasonable answers. Yeah, fair value. Yeah. Yeah, I could see, a decent amount of those answers being the real reason why people may buy and sell at a given level. And I want to kind of introduce that really quick. So fundamentally, for the most part, we're not always going to know why buyers and sellers decide to step in on a given asset at any given point. Sometimes we do have the answer to that question, though. Like, for example, if you look at something like NVIDIA, I think everybody probably knows, at least you're reasonably of an active trader or aware of what's going on in the market, that people probably decided to sell right around these previous highs because of the fact that that DeepSeek AI from China came out, right? And that was a serious threat to, maybe the prominence of Nvidia and the chips that they're selling, right? So sometimes we do have an answer for why people are buying and selling at a specific level, and other times we don't. And the point that I wanted to make is that it's not always important for us to know exactly why people started selling at that 159 or 149 area, 150, right? It's not necessarily important for us to know that, but rather it's important for us to recognize the fact that, hey, there are some prominent sellers in this 150 area, right? Maybe even a bit more of a zone up to 153. There are some prominent sellers in this area, right? 1, 2, 3 bids to this area have all been met with significant selling. And we don't necessarily need to know the fact that this was due to earnings, this was FOMC, right? We don't need to know that to be able to recognize the fact that there's some serious selling going on in this area, right? So point being, when you're doing support resistance, when you're marking out these key levels on the chart, all you need to understand is that somebody's or some large group of people, or I should say some large funds or people who have enough money to influence markets, decided that this is a place for them to sell, right? And all we can do as traders is react to the decisions that these big money traders are making, right? We have no influence on our own. We don't, and never probably will manage an amount of money that can move markets, unfortunately. So as a result, our job is to monitor what these big money buyers and sellers are doing and react accordingly to their positioning. So that's the one thing that I wanted to mention. Again, obviously there is, definitely reasons for people to buy and sell at given levels. It could be fair value, right? I think one of at least mine and River's favorite trades that we've taken together was one on T. And I've talked about this level multiple times, and I always bring this level back up. But back in, I think this was late 2023, this 14 buck area on AT&T basically represents a market cap where they are trading at their cash value, right? They're basically trading at the value of the assets that they hold. And for a company like AT&T, it's probably not going away. That is what I would consider more than fair value. And that was the reason that I took a buy. I think originally it was right about here potentially, or maybe it was this time, I think was
It
the
was
first
that
time I
one.
hit.
Yeah,
Yeah,
that
it
one
was,
was yours. But then if you go to that other one, that big red candle, that one, I
that's
alerted
where you hit it.
I
Yeah.
alerted calls that day, dude, and did a 10% gap down the next morning.
Yeah. So anyway, right. So there comes a time and place for us to understand why levels matter, maybe more than others. However, and that can be something that adds to the trade, right? But fundamentally, right, you didn't need to know that AT&T was trading at cash value to zoom out, 20, 30 years on this chart. Look at this. I guess you got to zoom out even a bit further.
Yeah, you gotta go
Zoom out,
for it.
zoom out 25 years on this chart to see that this 14 buck area, 1470, I guess, is pretty goddamn important, right? Highs back in 1996, lows back in 2002 and 2003, and we finally revisited it back in 2023. So, point being, there's plenty of key levels in the marketplace to be paying attention to. Some of them have more significance behind them, and some of them don't. But either way, the more you know about it, the more beneficial it could be. But at the end of the day, it's really not important why a level matters as much as identifying where those key levels actually lie.
Yeah, and oftentimes if you start trying to dig into the why, that's where you'll start to get a little too deep. You're better off just identifying the places on the chart that matter. You don't need to know why 14 is the price. You just need to know if T's at 14, you hammer it.
Exactly. Yep. And that's the problem that I think we see so often too is, people in the trade floor asking, oh, why is SPY green today? Why is SPY red today? Why is SPY flat today? It's like, it doesn't really matter. Like, why do you care? Type of thing.
Yeah.
Just zoom out, look at the chart, trade the levels, and focus on that. There's going to be a reason that you could point to every single day the market's up or down, right? It's not super important to understand that. It's much more important to understand where the key levels are. And obviously, fundamentals have a super significant point, and kind of place to be used. However, as a new trader, you're not going to have your head wrapped around all that. You're not going to have the biggest understanding of, why is Donald Trump good for these specific sectors? And, why is Kamala good for these sectors? And blah, blah, blah. Regardless, you're not always going to understand why a level matters, but very important to understand which levels matter. Everybody clear on that? Norman says, what, Norman? Question, Tosi, do those sellers get filled all their order when they take a huge impact on price? Okay, I think I understand the question. I think what you're asking is, do sellers basically get filled all at the same price, like big sellers? Is that kind of what you're asking? And if the question is basically when you're taking a big sale, do you get filled all at the same price? The answer, generally speaking, is no, and I'll explain why. If you just introduce a significant flood of shares onto the market at any given point, price is going to react, right? If we took a look at ES right now, futures, this is the only thing that's trading overnight. So, well, that's not true. But anyway, right, if we look at the level twos, some people are selling, 6, 37, 27 contracts, kind of near the current price. If I just went ahead and sold 1,000 contracts at the bid, price is going to dump, right? Because that's significantly larger than any single current order on the marketplace right now. So there's going to be an impact, right? Kind of like we discussed in prior lectures. You kind of think of the marketplace like an auction, right? And let's say, for example, you're at an auction to buy, I don't know, cattle. And all of a sudden, there's, 5, 10, 15 cattle being sold. River walks in with all his ranch hands and comes to sell 10,000 cows at the auction house. The price is probably going to go down because this guy's got so many cattle and there's not that many people to buy it. So all of a sudden, supply and demand are out of balance and the price needs to be adjusted in order to meet that new supply. Basically, the answer to your question is if a seller just introduces a large amount of shares onto the market, price is likely going to drop. However, there are mechanisms that large sellers of that magnitude can utilize in order to prevent that sort of impact, such as dark pools or other kind of prearranged sort of orders.
And often do utilize because they can get in trouble. If they affect the market too much, they get in trouble for that. So when you see these massive sell days, you're seeing algo orders pile on, like it doesn't matter that, Jeff Bezos sells 1 million shares. It matters that the next day those algos put in 50 or 60 million shares of sell volume. That's what's actually moving it intraday. It's not those. There's of course times and places that one large individual order at a point will move it, but
Right.
generally speaking, you're seeing algo volume all day long.
Right. I mean, what is it? I think a couple of years ago when I looked into this, like 70 to 80% of trading was algorithmic. I'm
Yeah,
sure it's more
yeah.
now.
It's more now after all the washout.
Yeah, I'm sure it's 80 to 90% at this point, maybe even more than that.
Yeah.
Cool. All right. So just to bring a couple examples of support and resistance on the PowerPoint before we fully switch to the charts, and I know we kind of talked about some. I wanted to start off with a very, very simple graphic, right? Just a silly little line chart. Just to be clear, this isn't generally the way you should chart support resistance, but real easy way to get the concept here. So as you can kind of see, this is our typical price versus time chart. And what we have here are a couple levels of support and resistance. First thing that I want to mention, support, as you can see, if this line chart represents price, generally speaking, when price comes down to this area of support, it's very common to see some kind of bounce, right? Some kind of reaction from buyers as we approach this level. And conversely, with the level of resistance, as we approach those levels of resistance, it's very common to see some kind of reaction from sellers, right? Some amount of sellers stepping into the marketplace. The important thing to note is that resistance can absolutely turn into support, which sometimes is why, the term support and resistance are much less significant. And I sometimes just say, key levels, because that's really all they are, right? Support and resistance are basically interchangeable terms. The only difference is where price is trading at relative to them. So if price is trading above a resistance level, well, it's now support, as you can kind of see from this little changing label here. And if price is trading below a key level, it's going to be resistance. If it's above a key level, it's support, right? Very simply put. And moving on to some more real examples, I took a screenshot of just what the SPY is looking like today. And you can kind of see how the same kind of idea is reflected, right? So this orange level that I'll draw your attention to first was the previous all-time highs on the S&P. And you'll notice price came, revisited that area, not quite to the tick, but real close, moved a bit lower. Price came and revisited that same area, moved a bit lower, and then ultimately turned into support, right? You can see these lower downside wicks indicating the presence of buyers in this area. And you could run the same thought experiment with a good portion of the levels on this chart, right? This one here on 585 previously was resistance, all-time highs on the SPY, came back and revisited that level multiple times as support, even pretty recently as well. Same idea with 600, same idea with 608, right? This sort of concept happens every single day in so many different asset classes. It's all over the marketplace. And it's, I'd like to think, reasonably easy to identify too. So we'll talk a little bit more about where to draw your levels, why to draw levels in some places, and why not to draw levels in other places. But fundamentally, this is the idea, right? Monitoring these key levels and determining where we are trading at relative to them. And as River mentioned earlier, if we're trading real close to a resistance and below it, probably not the best idea to get long. If we're trading real close to a level of support, probably not the best idea to get short either.
Terrible idea, you could say.
Yeah, you could say that. And last thing that I wanted to mention, support and resistance are kind of terms that could apply to more than just key levels. For the purposes of this lecture, we're just going to focus on key levels. However, this same concept could apply to something like, maybe a trend. So this could be a support trend line where buyers come in and continue to kind of react and step in to purchase an asset when it reaches this uptrend. And you can also kind of combine that with your typical horizontal support and resistance level. So anyway, you could consider a lot of things support. The EMAs could be support. Like if you take a look at maybe your 9 and 20 EMAs, those could very easily be a level of support. Like for example, our 50 simple moving average today in white was definitely support for the S&P. Same with the EMAs as well. If we take a look at something else like NVIDIA, that 200 simple acting as support today, pretty standard. Nothing really too shocking there, right? These are levels of support and resistance. These are areas that really matter. So anyway, just wanted to kind of cover that, but we're going to have more lectures in the future, specifically talking about things like moving averages and trends and that sort of thing. Cool. So from here, we really wanted to just take the rest of the time to stay on the charts. So we'll talk a little bit more about getting these support and resistance levels, kind of which levels to stick with and which levels to maybe pass on. Any kind of other questions on the basics before we move on to that?
Norvin, definitely take note of gaps. I see your question. Definitely always take notes of highs and lows of gaps, at least in my opinion. You're very often going to get a reaction. Obviously, today we closed, slightly above, well, on NVIDIA. I mean, closed slightly. We're working on filling the gap. And same as SPYs, same as QQQs, we're working on filling those gaps. You need to be aware of the tops and bottoms, not to say that they're going to be massive levels or anything like that, but they're definitely places where, if that gap is almost filled, you don't want to be getting long up there at the highs. We do have this interesting thing, and you can kind of see it on Toasty's chart right there. We got the double gap situation going where we gapped up and we gapped down over the same spot. And so when we get up to that spot, expect some nice volatility. We have the one previous high. I was looking at this earlier today is the only reason I'm thinking about this, but we got gap and gap, and then we had the one previous high from the kind of downtrend. One of those lower highs is just about dead center of it. That little zone right there will likely give us some pretty wild volatility. We just have very little data in that area recently, and so that'll be a nice little spot. And when we get up to there and into there, we'll fill that $2 or $3 in the blink of an eye, at least in my opinion.
Yeah, that's a really good point.
Yep, but always take note of gaps. Even though we have previous data in them, we have much less recent data, and there's going to be a whole, there's basically, or you have to think of the market as there's basically orders for all intents and purposes sitting at every single penny on SPY every single day, waiting to be filled. So there's orders in that gap that were just completely skipped over. Maybe it's a lot, maybe it's a little, but that's what makes it where you can get that quick movement through them is those orders starting to fill, moving up or moving down or whatever it may be.
I thought it'd be fun to pull this up, but maybe it's not useful.
No, they only give you like 2 free ones.
I thought it was like, yeah, they give you the Dow.
Dow and Google right now.
Yeah, this is probably a little much to start talking about, but this.
But explain it. I mean, it's relatively simple. All of those little orange dots that you see up above and below where we are, those are all orders that are actively waiting on the book as we speak, and they move up and down all day long. There's always, part of being a market maker, they are required by law to provide liquidity. And so that's what we see. That's why there's always a buyer. When you're buying when you're buying at your support and you're buying calls and maybe the market's going down, but you're buying calls, that's because there is the market is required to have a buyer and a seller at all times. And so market makers often provide that liquidity for us. They're the ones that will buy your minus 99% SPY call at the end of the day. It's not a person, that's a market maker providing or filling their obligation. So that's what we see here. All those orange dots, yellow dots, dark blue dots, all different levels of volume and orders sitting on the order book right now. So That's how the market moves. And so when you get into a gap, as maybe you start to run into less and less orders because we moved through it, and you just have those random ones sitting it makes it much easier for the market to move up, blast through some supports and resistances, and move through the gap.
You're more bold than I am, River. I probably would have clicked off it once I started realizing how much I might be getting into. But yeah, I guess just to explain this a little bit, this is just a different way of thinking about it, right? Like you can see, very generally, orders are moving up and down with the market, right? These are going to be your bid and ask, red and green lines. And some of them are fixed, right? So, for example, if I was looking for a level of resistance, I'd probably be very curious about this real solid orange line right
Yes.
at about 4,500, right? And it's 45.20 with 21 volume sitting right there. Same idea here, right? So these are basically going to be levels of support and resistance. And we could even go and look at a real chart. Let's see if I could pop this out real quick. This is 45,020. So let's just take a look at YM real quick. Let's take a look and see what 45,020 is. Okay, nothing too significant on the hourly. $45,020. Check that out, right? If we look at our just very simple candle chart, again, this is just something 5 minute, real short term. But notice how comparing this book map, right? This is very clearly where sellers are parked in the marketplace, right? Very clearly, right? You can see this is basically a heat map. As it fades from blue to red, it gets more significant. So there's very clearly some seller who's just waiting to sell at 45,020. And looking at this chart, you can see kind of why, right? There's clearly some amount of sellers that have been at this level for a while. And the next time we get there, they're going to be more than happy to sell there once again. So just kind of a different way to visualize the significance behind support and resistance, right? There's a reason that these levels matter, right? For whatever reason this level was created, people are definitely going to be paying attention to when price trades around that area once again. And you can see those reactions really, really commonly all across the marketplace. Like check this out, even back to the swing highs on the Dow here, right? 45,176 is the all-time highs on the Dow. Notice how once we got back to that same spot, no surprise, there were some sellers, right? Because there were some people who probably didn't sell the last time we were here that were like, okay, I'm going to put in an order and wait for the next time we're going to show up because we're in a bull market. We're going to hit highs again every single time. That's how it works, right? So they're going to set their order to sell up there and wait for whenever the market gets there. And all of a sudden, once the market does, there's a little tiny reaction, right? Not a big one, not a big sell here in this case, but something notable, right? Good place to take profits because there was clearly a reason to take profits there the last time.
And this is a truly wonderful like example of why I don't trade patterns unless it's a double top or double bottom. I mean, it's all support and resistance backed. And double tops work because frequently the market doesn't like to the market would be much happier just trading in a range. That's why we see so much of it intraday. Of course, we've had some nice volatility this last month, but very often we see the market trade within ranges during the day because it doesn't really want to go set new highs. They're making money in those ranges. And so when you push up to those highs, that's, again, this prime example of when I chart support and resistance, I always look for the wicks. I'll always chart it on the tops of a wick personally, because that shows me where one side gave up. We might have this big, nice bullish run, and then I want to see where did it stop, or we might see really heavy selling, and I want to say, where did it stop? Where did the other side show up and start trying to take control? And of course, today, like Toasty said, I mean, it's a small pullback. I don't know what that was. I mean, it's the Dow. It's probably 100 points or 50 points or something,
Yeah,
But
it was like 100.
yeah, but in the world of the Dow, that's not huge, But that's why I always try to capitalize and only trade around the extremes. I want to be short where people have been short a lot before. I don't want to just be short at some minor little thing where maybe we had a pullback. I want to say, okay, we ripped up to here, could not get past here for 4 days. Well, by the time we bounce back up like we are right now, I feel 100% comfortable being short when we are retesting those highs. And support and resistance does great things for us. It gets to show us where the market might stop, where it might stop dumping, or where it might start running. And what support and resistance gives us is a defined risk and reward. And so we know if we're up here at these highs and you're buying calls, your stop kind of has to be at the lows of the previous consolidation, from whatever that was 2 months ago. And if we're buying puts up here, our stop is right over that level. Could be a few, on something like the Dow, could be a few points, could be $1 overhead, could be 50 cents overhead. So when you come into setups like this, the risk reward heavily favors doing the opposite of the market, because if you do get stopped out, it's likely going to be a small stop out. Whereas if you buy calls, you have to have a wide stop and you have to count on new highs being set to make profit. And so, speaking on the probability side of things, your probabilities are way better to try to short those things. Or if you get long, you wait for the breakout retest. You don't buy the highs. And that all comes from support and resistance. The Dow, Toasty has it charted right now. You need one line on the Dow up here. And he has it where, that very top line, that's all you need right now. And we break and retest, you get long. We push up to it, you're short. That's, like, I mean, it's really that cut and dry.
Yeah, and River, I think one thing that you did with what you just said was one of the more important things that we've started covering a little bit in this lecture. You guys will notice when River's talking about planning a trade, he's not talking about, oh, if I trade it here, I could make this much money, but if I trade it here, I could make this much money. No, the first consideration is where's my stop out, right? If I'm getting short here, my stop out is, 50 cents above, if that, right? If I'm trading it short, I don't know, or if I'm trading it long here, right? Realistically, my stop should be down back at these lows, right? This is the most significant pivot below. You could have maybe a tighter stop up here or up here, but these levels are much less significant than something like this, where we have three kind of real established kind of bottoms here forming at this level, where these levels, yeah, they matter for an intraday trader, but for somebody who's swinging for more than a couple of days, this is nothing, right? This doesn't mean anything, but these significant lows, right? This is a massive higher low. When you zoom out on the weekly, right? Massive higher low here, right? That's a real significant level. But zooming in, right? You can see even more clearly how significant that is. So really important consideration there. And I think if you guys learn nothing tonight and you just want to take home one thing, always consider your risk before your reward. That is
Yeah.
how you stay in the game for the long term, right?
I
People
mean,
who
for
are,
anybody who's been to my classes, they know that in order of importance, entry, stop out, take profit. If
yep,
profits come, great. Bump your stop into profits, you're good. You're making money. Mission accomplished. But if you don't know where you want to buy and you don't know where you have to say, I'm wrong and get out, then you're setting yourself up for failure. And
right.
so, and I'm not saying you need to do the super nerd out. I know that there's some of the gurus out there that push all of this, like, risk reward math and trying to do all of it. Keep it simple, like use the chart, say my stop is 50 cents above me. I know my entry, my stop is 50 cents above me, my target is $1 below me. Of course, that's not lining up perfectly for an option contract value, but you get to say, I have less risk than I have potential reward. And if you aren't in that situation, then you don't, you're setting yourself up for failure right off the bat. It's that cut and dry. Yeah, if you need to draw boxes like that, do it, keep it, do whatever you need to do to analyze that before you take the trade. That's what I try to teach all the time. I hear people say, oh, entry doesn't matter, but there's not a thing that's more important than a good entry, because a good entry means less risk. And you do all of this based on support and resistance. And like Toasty said, there's many forms of support and resistance. Maybe it's a level on the chart. Maybe it's a trend line. I describe trends as support and resistance at an angle. That's all it is. Same as EMAs, SMAs, maybe use Bollinger Bands, whatever you use, they're all some form of support and resistance. So we use the support and resistance to define our risk, define our potential reward before we enter the trade. And it's all based on what the chart tells us. And we don't want to be the ones trying to prove the market wrong. If sellers have been here before, then I want to be a seller there again until I'm wrong. I always try to emphasize this really heavily. I'm super open about, when we take losses, whether it's in voice chat or whatever it is, everybody is wrong sometimes. Take the stop out and move on. It's not something to dwell on. Everybody stops out every once in a while, but define your risk and instantly those stop outs hurt much less.
River. And one last thing that I wanted to highlight before we start talking more specifically about how to actually find these levels and how we actually go about charting them. I wanted to just highlight one last example. Again, I know we talked about it a little bit earlier on AT&T, But I think this really illustrates the concept of support and resistance so well, because of just the amount of time between visits to this level. One very, very cool thing about support and resistance is that the market does not forget, very uniquely, right? Again, going back all the way to late 1996, right? I think a good chunk of us probably weren't even born during that year, right? I know River was probably just getting ready to retire at that time, but most of us probably weren't even, in the world at that point. That's when AT&T first hit a high right around that 15, 14 buck mark. Then back in 02, 03, same visit to the exact same area, right? Very, very close, right? It's not perfect, right? However, real close to the point where you got to be suspicious that this level matters, right? Remember, this is a weekly chart. This is weeks and weeks and weeks of trading data. What we're seeing on this chart alone is probably, I don't know, what do you think, River? $1 trillion worth of shares exchanged hands over
Oh,
this time
easy.
frame.
I
And
mean,
I'm
people
sure on
forget
most equities,
AT&T
it's
is a
even
$100
more
billion
over this period.
company. Yeah, so easy.
Regardless, once we come back to that level in late 2022, early 2023, you got to be thinking somebody's got to still be interested at this level, right? We haven't been here in 20 years, 20 years. And the last time we were here 20 years ago, stock price increased 120%. The last time we broke above here, stock price increased 202%, right? Another bounce on this level, 50%. So again, not to just keep the focus on reward here. However, it's very clear, no matter how you look at it, that this level matters to a lot of people. And again, this is 30 years of trading history in one chart. 30 years. And stock still reacts to the level the exact same way it did all the way back in 1996, right?
That
Here,
was even part
perfect
of
bounce off this level, moves, upwards of 30 to 40% off that level in just a couple months. Well, I guess that was more of a year. And then here, right, we move below that level a bit, but ultimately reclaim it. Again, another nice 60% move off that same level. So point being, these levels matter so much. And I guarantee you, if AT&T ever made it up back to that 45 level, you better believe that everybody should be shorting that. I mean, I don't know when AT&T gets back to 45, but if it does, buy some puts because it's not breaking it.
Well,
At
dude, and
least
that
not
was
in a
even
single week.
that was even when I alerted those AT&T calls back there. Don't get me wrong, we were a day early. Obviously, worked out in the end, thankfully. But that's what I said. I was like, you guys, this is a 30-year triple bottom, and I got roasted for it. And here we are. The stock's up 60% off those lows. I mean, don't get me wrong, it took a year and a half or whatever, but like that's reality. I know that everybody sees these Nvidia type runs, but you do a 60% return in shares in a year and a half on a normal name, and
Oh my
that's
God.
really, really, really phenomenal return. Not to mention AT&T paying you a little bit of dividends. Best stock ever. Highly recommend it.
I was gonna say, if you make 60% in a year off something like AT&T, you are doing incredibly well. I mean, that is insane. And I know a lot of people's idea of what's doing well in terms of returns in the market is incredibly diluted, but I know this is a bit off topic, but if you think about it this way, where I don't know, probably 60-ish% of funds can't return more than the S&P on a per year basis, which the S&P right now is pretty aggressive, maybe 20-30% annualized. However, typically in a year, the S&P will do 8 to 10%, and a lot of funds can't even beat that. So I know the majority of you will do some of that in a single day in your port and think, oh man, I wish I doubled it. It's like, you really got to fix that mindset. Anyway, River's comment kind of set me off thinking about that. All right, so let's talk a little bit about actually finding these levels. You guys have seen me kind of throw a couple of these on the chart just randomly, and let's just talk a little bit more about a system to doing so. So generally speaking, levels on the higher time frames are going to matter more than levels on the lower time frames. So for example, as I kind of mentioned earlier, the weekly chart is going to represent kind of millions and millions and millions and millions of dollars worth of shares exchanging hands, right? In this given period, 65 million shares worth of AT&T were exchanged hands that created one of these candles, right? Well, $60 million of AT&T trading at 15 bucks a share, that's, I don't know, something, I think almost a billion, close,
Yeah.
like 900 million or something. Anyway, that's not important. Regardless, the weekly time frame and the larger time frames represent a significant amount of data, right? And remember, all these candlesticks simply are just data to us. Whereas if you zoom in on the 1 minute, you got candles that are trading $250,000 worth of shares of AT&T, which is still a sizable amount of money, right? In this day and age, it's about 750K for AT&T moving in a single minute. It's pretty good. However, it has absolutely zero comparison to the $900 million worth of shares that might trade in a given week. So point being, these weekly candles and daily candles and 4 hour and hourly candles are going to be much more significant than your lower time frames. So for me, when I'm charting levels, I'm always going to start on the higher time frames, right? I'm always going to look out on the weekly and get a better picture of what's actually going on with a given name.
Yep, and I'm the exact same. I mean, 95% of my charting comes from the daily time frames, or that's where I like to chart on the daily. And if I am going to those shorter time frames, it's when we've had a situation like the last couple of years where it's, we set 50 new all-time highs or whatever it was, 60 new all-time highs in a year. When you don't have data, then on the daily time frame, because you're just blasting new all-time high over and over and over again, that's when I'll start to go down to the 4 hours, or maybe I'll pull fibs or I'll use other things. But when you're sitting at all-time highs is really, for me, the only time I'm getting off those longer time frames.
Right. And kind of to your point, River, a name like GEV kind of had a similar issue where, once it set these new highs, it kind of never looked back. And you can grab some of these levels from the daily here, but it's a little harder to find, right? You definitely might need to zoom in a bit to, the hour or the 4 hourly, just so you can kind of see a bit more clearly what's going on here. Now, you can certainly draw these levels and hopefully see them kind of reasonably from the daily there, but
then you never see them again. And that is the issue.
exactly. Yeah, you never come back until China releases AI, and then all of a sudden everybody's excited.
And then you have their great reset. Yeah. Someone asking how important are pre-market levels. So I will say that I put a lot less emphasis on them than other people. I always take notes of those lows and highs or big consolidation points in the pre-market, but I will almost never use a pre-market high or low personally for an entry. I will use them for, potential exits, because I view it as somewhere we might slow down. But while really, really important stuff is going on behind the scenes, even though it's very low volume in those after hours, for all we know, there's billions of dollars swapping hands on the dark pool on all of these things all the time, But it's always important to remember that it's low volume. So while we might stutter at a pre-market high, it doesn't necessarily mean we're going to stop there, because, that pre-market high, it might have been set on, in an hour, there might have been 11,000 volume or 20,000 volume or whatever it is. Then you go to the first candle of the day on SPY and it has 2 million volume. So, and I'm just making those numbers up, of course. I don't know what they actually are, but millions of it happens early. So are they important? Yeah. Like, if you get above it, then that pre-market range is being broken. So I'm more concerned of thinking it as a range as opposed to using it as entries. You know, I've bought the pullback to pre-market high and got blown out, and bought and shorted the bounce to pre-market low a few too many times and got blown out to really trust it as a level that I would take an entry off. I am always going to put substantially more weight on daily levels. Then the other thing to consider with the pre-market levels, big money people, as we see on the daily, they don't care what happens between open and close. They care, where did we start and end the day? Of course, that's limiting how they think about things, but still, the big money people are concerned with how did we start and how did we end. They don't care about the 5 minute candle at noon. They don't care about the 5 minute candle at 3 in the morning. They care about how do we start, how do we end. That's what really matters to them. So you see that on the daily, and that's a big part of me focusing on the daily.
Yeah, and that's a really good point. And I think a lot of people forget that is, a lot of these big funds, they're not trading on the 1 minute, they're not trading on the 5 minute, right? They're position trading funds. They're sitting in names for years or months at a time, right? You think about these pension funds running billions of dollars in the marketplace. They're not day trading on the 5 minute, right? They're buying Nvidia at 130 and holding it for 5 years, or they're buying AT&T at 12 and they're cashing in on the dividend for 45 years. They're not just sitting here looking at these lower time frames and playing, games with these 1 minute levels. So point being, right, if everybody else is caring about the larger time frames, that's where you should be getting your levels too. And I think that's probably a good segue for us to talk a little bit about where the best key levels really should come from. And we've kind of alluded to this point, and I'll let River just go ahead and interject whenever I say something that wants to get you talking or freaks you out a little bit.
Mhm.
But for me, some of the first levels that I end up charting, at least on any asset, are going to be swing highs and swing lows. And what I mean by that, when I say swing highs and swing lows, is they're really just pivots in the trend, right? If we simplify this, this is going to piss River off. But we just switch to a simple line chart really quick. Notice the areas
Yeah.
where the direction of the trend switches, right? Very, very simple. Where does the direction of the trend change? Here, here, here. And if I just go through and mark some horizontal levels really quickly, really roughly at all these levels, right, which basically we have now, and we switch back to a more normal setup here, notice how the key levels that I just marked on all those pivots in the trend are basically identical to the key levels that I already have on my chart that I'm already monitoring. So for me, the first place I'm always looking is those pivots in the trend, right? Where did price reverse in the past? And you can see how those levels are drawn out, right? It's mostly a wick right here, this wick here, this wick here, this kind of collection of wicks in this area, these kind of also collection of wicks and bodies after all these retests. This is a little bit more of a messy one, but same idea. So for me, this is always my first step in charting levels. Anything you want to add there, River?
Nope. Me too. Always the high. I call them dramatic highs and lows. Some people call them swing highs and lows. If you ever hear me say dramatic highs and lows, that's exactly what I'm talking about. They're the first thing I look for on any chart. I probably would have put a couple more on there, but that's just me. You know,
Maybe you would have. Maybe you
but
would have.
I like, yeah, you want to, and it goes back to, how I was talking about Mark and Wicks. It's the same idea. Where did the market change? Like if we're selling, where do we start buying? If we're buying, where did we start selling? And I'm not talking about a pullback candle, I'm talking about where did the market pull back, 1, 2, 3, 4%, whatever it is. That's where I have interest in trading. And I get asked it all the time, River, what do you think of this trade? And I might say, hey, it's not for me. That doesn't mean don't take the trade. That doesn't mean I'm saying it's a bad trade. When I say that, what that means in most basic terms is we aren't by a daily level. That's it. That's what I'm saying. I say it in more words, but what I'm saying by that is we aren't by a daily level. So I don't have interest in putting on a trade. Because, I won't trade in the middle of ranges. I only want to trade at the highs and lows of things. So that's when people ask me, what do you think of this trade? And I say, hey, it's not for me. That just is because it's not lining up with one of my daily levels to have any sort of interest for me. Nvidia is a prime example. I have had zero interest long Nvidia. I mean, I think you should be long Nvidia out of principle, but for 5 months now, probably, I've basically been telling people, don't touch it. It's not doing anything. If we get the dip to 130, buy it. That's what I've told people until 2 days ago. All of a sudden, Nvidia is clobbered. It's down 20%. It's sitting at a 200 SMA. It's sitting at some important previous levels from that breakout back. I think it was last summer. I don't know. Yeah, probably last summer. Sitting at some important zones from back there. All of a sudden, Nvidia is super interesting. And somebody even asked me yesterday, what do you think of Nvidia? And I said, it is my single-handed favorite high risk long in the market. Did I think that we were going to get the kind of candle we got today? No, but it was just one of those no-brainer longs, sell to some major points on the chart, and all of a sudden it's interesting again. And that's what I've told everybody for Nvidia forever. And then finally, I get to say, oh yeah, Nvidia is like, what? Nvidia's at 120, buy it. Nvidia's at 116, buy it. No questions. And you get that from support and resistance on the chart.
Right. And one other reason to, we're talking hindsight now, but one real obvious reason why I should have been real damn afraid of at least being involved in Nvidia is after a massive bar like this. I mean, you have a gigantic bear bar here, opens at its highs, closes directly at its lows, fully engulfs basically the previous 2 days of price action. if you see a candle like this, and we talked about this a lot in last lecture, this isn't something where you should look at and be like, yep, I want to get long. This is exactly where I want to get long.
Yeah.
Right. And you could see, there was a minor bounce into the next day. Maybe as a day trader, a scalper, there's certainly a case in point to maybe get involved for something like that. But when you see moves like that, that should be telling you that sellers are really in control of this name at this point. And while the news that came out, certainly came as a surprise to, I'm sure, the majority of people, and shouldn't have been something to be expected, it kind of makes sense, right? I mean, clearly somebody knew in advance. This is obviously related to FOMC, at least I believe it was. But there was a reason that they sold this name so aggressively, right? They knew that, hey, something was probably coming, and ultimately weighed down price. There's always somebody that knows, and we can use kind of reactions to these key levels of support and resistance in order to kind of judge the health of a given name, right? When you're seeing these real strong moves off of these resistance levels, probably a good reason to be cautious, right? Even on something like, I don't know, like your VRT, right? This is a pretty disgusting move, right? A lot of people probably could have just bought the lows yesterday and said, I'm done with it. But there's definitely reason to be a bit cautious, right? Just wait for this to kind of firm up a bit. After a day like today, it looks a little bit more reasonable, right? Nice bull bar closing near its highs on still heavy volume, right off the 200. So a bit more of a reason to be involved at that point. Nice move off the $100 level as well. But anyway, I don't know where I was going with that.
So I got a person asking when I say NVIDIA is an obvious buy. So are you on the daily chart, Testy?
Yeah, yeah, yeah.
Slap 115.12 and 116.84 on there.
115.12.
And so something I always like to talk about when I do these support and resistance lectures. Shark, our buddy Shark, for anybody who knows Shark, he had the best description of support and resistance ever. Is it cool when you bottom tick something or top tick something? Absolutely. But nobody cares in the long run. So when he said, when you look at support and resistance, rarely are you going to be to the cent correct. So I always like to look for major areas that are strong. So Shark said, squint your eyes. Don't focus on the level, get it a little blurry, give it 5-10 cents a range. So when I see a range like this, and this is just the one that I have on here, and if we go back and we look at basically that end of September into October lows before liftoff, yeah, right in there, we see what happened. We also, we exploded off of there. Also, if we go back to May, we exploded when we finally got over 115, that 115, 116 area. And then ultimately, when we sold back below it after that move, looks like maybe July, mid-July. Yeah, in there. You see how hard the buyers tried to get us back up into there and ultimately never were able to. Was there news in there? Was there something going on? I'm assuming one of those sells was likely the Japan carry trade. That might have actually been later. I don't remember. Could there have been news? Could there have been those things? Yes. But we can look at that area and you'll hear me talk about it. Toasty, 1K, Tilio, lines in the sand. That 115 to 116 area is to me one of the stronger buy points on the NVIDIA chart. If we get below it, then great, short it back down to 100 because your risk reward is great. Once you get below 115, then your stop is 116.84. So you got a $1.80 on the upside, looking to go triple bottom that 183, so you're risking a couple bucks upside for $15 a downside. Great. But if you long it at that 115 to 116 zone, your stop is under 115. So you got a dollar risk. Ideal world, looking for 120 and then maybe 124.70, in real life. But instead, we just run from 116 to 130 in a day. Like that's not what you should be looking for. Who cares about the gain? Care about, okay, that zone where I wanted to enter mattered. So that's why I say personally, NVIDIA was sort of a no-brainer long to try it there. Of course, you're fighting a 20% down day. So you're playing with fire no matter how you look at it. But if there is a place to long NVIDIA, that was sort of it. Not to say we don't go back down there, not to say we don't get below there at some point, nothing like that. Just strictly saying, if you're going to take a stab, pretty dang good place to take a stab.
Yep. You couldn't have said it better myself. And one other kind of way to describe some of the advice that Shark had given us years ago at this point, support and resistance is an art, not a science, right? And that really goes to River's point. When you're charting these support and resistance levels, you're not always going to get the levels right to the exact cent. And it's not important that you do, right? Because you can have all your levels perfectly dialed into the highs and lows, and the market does something like, this, where you have a level perfectly at the previous all-time highs, and it blows above it by 60, 70 cents, and then moves lower, right? So it's important on how you actually, well, I guess I drew the level incorrectly a bit. It wasn't that aggressive, only a couple cents higher than that, but still to the same point, right? You're not always going to have perfect levels, and you shouldn't expect to have perfect levels, right? So very truly recognize the fact that the market in general is so much more of an art than a science, right? Charts aren't going to move exactly the way you want them to. Charts aren't going to bounce at the exact place that you want them to. But if you give yourself the opportunity to be a little bit more patient, right? If you zoom out to these higher time frames and afford yourself the time where you're not just, scalping SPX contracts and looking for 1,000% in 5 minutes, and instead can zoom out a bit and afford yourself a little bit more time and allow the market to react appropriately to your key levels, you actually might be a little bit more successful than you might realize, right? When you're just sitting on the 5 minute, if we look at how we reacted to this level intraday, okay, I guess it was pretty damn clean. I was hoping for maybe a break below at least, but
Well, the reason the NVIDIA example is good is because of how good it was.
yeah,
And
that
and then you even like ignoring the fact that you knew this zone, like you could have had this zone on your chart for 4 months at this point, knowing that it was a buy zone. They also, and just for full disclosure, I didn't catch it. I mean, I'm regretting it big time, I didn't catch it, but they gave you the double bottom from yesterday's low to today's low. They gave
yeah,
you the double bottom. So they pretty well they handed this morning Nvidia longs were handed to people on a golden platter. Again, I missed the server. I guess I wasn't in there,
it's
but
the
it
server.
but it was one of those days where I mean, they're just even yesterday, like I said, I told people yesterday that I loved Nvidia long, I mean that it was a high risk, but I love it, and then today, of course, right off the open, the swingers were likely relatively upset if they didn't get out right away, but ultimately there was really, if you were long at the lows yesterday, there was no reason to stop out before those lows gave way today. And so today we had that volatile sell down right away that ultimately the buyers dove in and they never even, I mean, you can see on the chart there was no red candles really intraday,
Yeah,
so on the longer time frame. So ultimately the buyers showed up and then they just continued to click the buy button all day long, so again, it won't always be that good, but it also shows an example of why I like to find zones more than those individual levels. Or not necessarily more, but I can have my risk defined, like if I'm buying the second it touches 116.84, and that just happens to be my level. I understand people's could be a little bit different. Maybe it touches at 116.84 and I buy instantly. Well, my stop is 115.12. So until we break 115.12, I don't care what happens. Anything between, your entry, you enter at your support. You know where your stop out is. Maybe you know where your take profits are. As long as you enter where you're supposed to, anything that happens between stop out and take profit is noise. You don't adjust anything, you don't do anything different. So that's why I like, if I can, finding two strong levels like that next to each other. Those are places where I feel a lot more comfortable putting the risk on and taking a trade. And all from support and resistance.
hmm yeah. Support and resistance certainly is the cornerstone of any good trade. If you don't have these levels for reference, fundamentally you can't even really build a trade, right? Because all you're trading off is price. And if you don't have a price you want to enter and a price you want to exit, that's has some kind of reason or logic behind it. You can't just say I want to buy Nvidia at 100 and sell it at 110. Okay, well, why? Right?
Wow.
And obviously, in this specific example, that kind of works out, right? 100 is a decent level there, and 110, not a bad one as well. But regardless, right? Hopefully the point still holds in the sense that you can't just be picking where you want to enter and exit out of a hat, right? There's got to be some logic to it, some kind of reason. And let's say, for example, you did get an Nvidia today. Well, the first place I'd probably be looking to sell is somewhere right around this area, right around these prior lows that we had hit before this whole gap down, which funny enough is right exactly where we closed, right?
Yeah.
There's probably no
And you
accident
of
to this.
course generally don't think the $15 rip is coming in a day.
Right.
It's not like that's not realistic. And that's what I always try to tell people when you're charting support and resistance, when if you look at somebody's chart and your first thought is that's cluttered, well then you should probably take a step back and say maybe I need if it's a person who knows what they're doing, then you should probably take a step back and say, I need more levels on my chart. Unfortunately, Nvidia is doing this thing where it gets to, make the more reasonable traders look dumb because if Nvidia was at 116 and somebody was asking me or whatever this morning saying, should I buy it? I would have said, yeah. And then I would have said, okay. And then you target your 119. And then if you're lucky, maybe you get to that 120 in VWAP and then 120.97, kind of that pre-market low. I'm out, that's a perfectly reasonable trade. If somebody's at 116 and then they say, are we going to go to 130 today? I'm going to say, no, you're missing everything on the chart between here and there. Of course, if you're a swing trader, you can have those further out price targets, but
Right.
still trim along the way, like between 116 and 130, there is levels to take note of. Today is a day where Nvidia
Just
didn't
didn't
care,
matter.
like you didn't need levels today because it was vertical. That's not, it's just one of those days. Generally speaking, not the case. You need those levels. And then I like the daily levels because they're major and they work over and over and over again.
100%. Yeah. And yeah, I think you bring up a good point, River. The type of trade that you're taking should very significantly influence the way you end up managing it. And this is a whole lecture that we're going to have eventually, right? This isn't something that we could cover in a couple minutes, but fundamentally, as a swing trader, right, you're going to spend more time in that position. And more time means, well, you can have a little bit more room on your stops and you can have a bit more room on your targets. Because the charts, there's a higher probability that any given name is going to move, say, $15 in a year rather than in a single day, right? Expecting Nvidia to move, I don't know, what was this, basically $15 low to high in a single day is kind of unrealistic. I mean, we haven't seen a move like that. I mean, probably since right about here, I guess, and not even wasn't $15 in a single day. So it's not something that happens very commonly at all. So you can't be setting your expectation to be looking for a move like that if you're just going to be in for a single day. Now, obviously, if you're a swing trader, you have more time on your side and you can kind of sit patient in a position for as long as you need. All right. Any questions that you guys have? I think right now, kind of the tentative plan is for River and I to come back in the room on Thursday night and talk through some of your questions. At least I think that's what the plan is, but I don't know if that's set in stone yet. Regardless, though, I think Thursday night we were planning to have kind of a more in-depth Q&A. We could even talk through this concept even more, do some chart reviews. I think the one most important thing to note about support and resistance is that you could have understand every single thing that we said in this lecture tonight, but if you don't actually practice this, you will not get good at charting support resistance. You just won't, right? It's a very simple concept, in my opinion, but it does take practice, right? You got to be able to look and see why, maybe just putting a level in the smack dab middle of this range isn't actually significant. And funny enough, it kind of did end up being significant. That always happens, but but anyway, right? When you're going to chart, key levels, you want to be having a reason to be doing so, right? So again, just starting off, swing highs and swing lows, always real easy spots to start from, right? The next place I like to look is areas of consolidation like this, right? Where very clearly, we didn't immediately reject from this exact area, but clearly there was some significance, right? Clearly there was a reason that price stalled out in this area. And you can see how price reacted when we revisited that same spot, right? And we could probably repeat that exact same example on something like this, maybe even something like that.
Yep. And
Maybe
I do
even,
the same thing. And then I even often mark the bottom. And if you mark that
yep,
bottom and the tops of those consolidations and look at today, that was where the movement happened. That was where we had a ripper up into there. Then we started to get some consolidation and then got the real big burst upside. Once we started working through that, old consolidation area, we really started to move through there.
which was 122.67. What was that? Yep, right on the low of that. Look at that. The exact low of this consolidation, 122.67. You take a look at the 5 minute.
Yep.
That's
And
actually
like,
crazy.
not to say that bottom move isn't big, but that's a six,
Oh,
7
sure.
move. But
Sure. But
That's where we went vertical.
Yeah, I mean, $6, $7 move intraday, but up to this point, this is basically the metric to be flat on the day, right?
Yep.
122.67. You're basically not up or down. You're just it's
Yep.
nothing happened. So all things considered, if you're zooming out, this really wasn't anything significant.
And then all of a sudden, just vertical. They
That's
wanted
always how it goes, huh?
they wanted to buy all the Nvidia today. What was
Well,
the volume on it? What kind of volume did it put up today? I know the last two have been insanity.
579 million. How much is that?
579
579.
million. Ooh, times 15 billions.
$75 billion of Nvidia was traded today.
Yeah, look at yesterday.
818.
It's wild, dude. It's pretty insane.
100 billion of Nvidia was traded yesterday.
And
Holy.
that is just like one of those wonderful examples why retail traders don't matter. Nancy Pelosi's 5,000 shares don't matter, like that, like you always got to take reality into account.
Well, Nancy Pelosi's 5,000 shares on their own don't matter, but since it's
Yeah,
her buying, all of a sudden it becomes important.
yeah.
But if nobody knew it was her, it wouldn't do a thing.
Yeah. And if she would have just bought 5,000 shares, nobody would have ever mentioned that she was in a trade. That's
Yeah, exactly.
that's the crazy thing.
There was one other thing that I was
Contracts.
going to say, but I forget what it was. I got too distracted. Anyway, I think that covers support and resistance pretty well. Hopefully, by the end of this lecture, you now understand the significance of support and resistance. You understand why it matters, because I think that's important for a lot of people to understand why you should care about these key levels, right? It's one thing for me and River to tell you to, look at these levels and just deal with it. But hopefully, it puts it into a bit more context as to why these levels actually matter, right? Just to summarize, this is where big money is actually buying and selling, right? This is where they're making moves on their positions in between these ranges, right? Much less significant as opposed to these significant kind of episodic pivots, right? Where we're seeing these real big moves in price. This is the most important area on any given chart. And you'll notice, right, at some of these key levels, this is where we experience some of the largest moves, right? When we're just sitting in a range, there's not typically very much going on, right? You got some big moves here and there, but these key levels are where the moves are actually happening. And as an options trader, especially, that's where you really want to be positioning yourself is
And they tell
where
you where the big moves will come too, because consolidation, obviously simple enough to trade, buy high, sell, or buy low, sell high, pretty simple. But consolidation happens for bigger moves to happen. And
right.
Nvidia is this prime example, everybody talks about, oh, Nvidia, it's up, whatever it is, a
I like
thousand
this example
percent.
better.
It spends so much time consolidating. Nvidia will rip for 2 months and then consolidate for 4 months. And so it's always important to remember that consolidation is the most important part in the market for large moves to happen. And as support and resistance traders, we need to use those consolidations for our advantage. Buying calls at the resistance up at the highs looking for a breakout. I mean, we've all seen it. It's a failing strategy. It does not work. Maybe the breakout comes, but you got to go minus 50% first. So it's a horrible trade. Well, when you take advantage of the support and resistance around these long consolidations, you buy at the lows. Then if the breakout comes, you have the best possible entry because you bought the low. So now if it moves up to the high, you obviously trim. And if the breakout comes, then great. You get to catch that bigger move with the best entry and the least risk on the trade. Anybody that's chasing the move at those highs has to deal with pain while you're already in good profit. So that's why it's so important to, don't buy calls at the breakout level. Look for a dip before that breakout comes. And then, like I said, provides you the best possible entry, reduces your risk dramatically, and then gives you the real potential to get into the big move without having to stress at all.
100%. Yep. And just to highlight, this is another one of my favorite examples. This is one that I studied toward the ends of last year. GEV, I think they're just doing basically nuclear power and obviously focus on AI data centers, that sort of thing. You'll notice this thing consolidated between two levels for 6 months, basically. And if you include the IPO period where it really did nothing as well, basically 10 months of consolidation, doubled or tripled in stock price basically in, let's see, 70 days, almost 3 months.
Yeah.
Then did the same thing, consolidated for another 3 months and ripped for 10, 15 days, and now back to that range. So being able to pay attention to these just very, very simple levels, right? I mean, it's pretty easy to tell where the ranges are on this chart, here and here, right? I mean, you can just look at it and see where the stock price stalled out and chart the highs and the lows and trade based off that, right? It's
And
pretty.
that's what I always try to tell people, in simplest terms, resistance is where the market stopped going up. Support is where the market stopped going down. So
Mhm.
just glance at the chart and identify where that happened, and you will find yourself being so much more successful. And then not trading until those areas come. I know that a lot of newer traders have this thing where they feel like they need to be in a trade at all times. And what I teach is, part of being a trader, and specifically a good trader, is doing absolutely nothing 90% of the time and letting that trade come to you. But we hear it in VC all the time. Oh, River, what are you in? Flips, what are you in? Whatever it is. And maybe we're already in a trade and we're up. That doesn't mean get in a trade. That means, hey, you missed this trade. Now patiently wait for the next one, because you
Right.
don't just want to FOMO into things. And, that's how you'll end up losing a lot of money and not making any money.
Exactly. Carlos says, so key levels are best found in higher time frames, but trading wise, what time frames will you normally use for your entry points? So me personally, a lot of what I do these days is fundamentally different than how River's trading. So River's majority scalper or day trader, where I'm basically the opposite in the sense that I'm holding for at least an overnight minimum, but usually a little bit longer than that. So for me, generally what I'm looking at is getting my levels off daily and weekly charts. And kind of the lowest time frame that I'll enter off of these days is the hourly. So if I'm looking for a close above or below something, it's going to be on the hourly. Um, Outside of that, there's not much of a reason for me to look at any lower time frames unless I'm just doing it, kind of for fun or to talk about the chart with somebody else. But outside of that, those lower time frames really don't provide too much value for me.
Well, and I think that's a super important thing. If you're a swing trader, you have no business on the 5-minute chart. You have no business on the 15-minute chart. And
Right.
it
Even the
all
hourly
comes
is
back to that, you need to build the plan, and anything that happens between entry, stop out, take profit, noise. You don't need to worry about any of it. And swing traders, or people who think they're swing traders, will see it in OOT all the time. They're in a swing trade and a 5-minute candle does something. And they're like, do I stop out? It's like, well, I mean, was that your plan? Because if you were like, if you just bought 4 weeks at a time and now you're going to stop out because a 5-minute candle closed somewhere, your plan probably needs adjustment. And so, like Toasty said, if you're a long-term trader, spend your time on longer time frames. Like, I mean, we've all seen some really ugly hourly candles turn into like the most bullish thing ever. So you have to let the market work when you're a longer term trader.
Yep.
Or if you trade like me and you're scalping, the second you're wrong, you get the hell out of the trade. Like it's that simple. You want to admit you are wrong as quickly as possible. And for me, like I said, I do all of my charting on the daily. And so, I trade on the 5-minute and the 15-minute intraday. Those are the two time frames that I use more than anything else. And so I trade the 5 and 15 minute. And my rule is, if I'm entering based on a 15-minute candle, close or whatever it is, I'm going to let another 15-minute candle work unless I'm getting absolutely blown out, and you just have to admit you're wrong and try again. But you build the plan before. So I'm basically trading daily level information on the 5 or 15-minute chart every day. That's what I do. You get your strongest, most important levels from the long time frames, then you trade those intraday. And I will say that I, of course, take note of those intraday's highs and lows. I use them as potential profit targets, like right here on SPY. So we buy that break of, we buy the break of whatever Toasty's level right there is, the break and retest on it. And then I'm going to be targeting, oh, well, I guess I'm probably not buying that because oh yeah, but it broke the whole pre-market trend. I took this trade today now that I look at this. Yeah. So you're basically
You're
buying
like,
that
I wouldn't buy
break
that.
and then you're targeting those highs from the pre-market. Yeah, look at that. That break and retest money. So money. Wow.
Yeah, that's clean.
Yeah, that was a ripper. But as you guys can imagine, I was all out at that pre-market high because that's the point where I think the market has potential of stopping. I got it in one candle. I'm good, you know. And then obviously stops were tight. Stops were below that trend, or if we were really selling, breaking below that previous candle, you stop out. Simple, cut and dry. If you're a slightly longer term trader, you're a day trader, then you use Toasty's daily level that he has right there, and that's your stop out. A close under there, and you're out of the trade. No big deal, you know. And just keep it that cut and dry. Your levels are there to use, so use them and don't question them. And if you question your levels, then maybe you need to work on charting a little bit more and practice really identifying levels that you have more faith in. That's a lot of the time I do. A lot of people know I do a lot of one-on-ones, and that's one of the main things I focus on with people. If you spend all of this effort charting, trust your charts, you got to trade the chart that's in front of you. If you're wrong, you take your stop out. If you're right, then you get to stick with the trade and let it run. But most of what I teach in one-on-ones is just confidence in the charting that people do. And it's always fine to DM me, DM Toasty, whoever, and say, hey, look at this chart. I'm in this trade. My plan is to stop under this level. And maybe I'll say, well, I would stop under this level, but you need to trust your charts. And getting good at support and resistance is really step number one for people to do that.
And I think me and you being in this lecture is probably really interesting because we don't trade the same at all, like not even close. And I always like to use you as an example because I frankly don't do things really the same way as you at all. Right? I don't really use any of the lower time frames. It's all
Yeah.
all based on higher time frames, and you're basically the opposite in terms of where you're entering and exiting.
Yep. And if you're, and like, yeah, that's like, I'm always looking to buy the dip or always looking to short the rip or whatever it is with the tightest stop possible. If I'm looking for, well, I should say, I swing trade every single day, I mean, I always
Sure.
something. But people think of me because it's mostly what I get asked about is only trade and spy and QQQ. Well, that's not
Right.
correct. People want to see how I scalp, see how I day trade those things. So that's what most people want to learn from me, and what I teach in voice chat and stuff like that is just, I want to find, I would much rather have, you know, 3 trades that pay me, 13% in 10 minutes than I would sit in a trade for 2 hours and then, make my 30 or 40% or whatever it is. I want those, you are right or wrong instantly. You get to take your money and you get to move on to the next trade and have no risk left in the market, and then sit and wait for those daily levels to come back into play and put some risk on and do it again. That's how I like to trade. You know, don't get me wrong. Do I sell early a lot? Do we frequently get some good entries that I could have held longer? Yeah. But, you know, I would always like a couple extra trades as opposed to just one trade that I have to hold all day that goes up and down and up and down and up and down and eventually pays. I want in and out and move on to the next one is always what I like to look for, which, like Toasty said, the complete opposite of him. He wants to put on a trade. He wants to let that trade work, widen that stop a little bit, and also increase profit targets with it. You have to. You can't just widen the stop and have more risk and no more reward. But it's just two very different ways of trading.
Right. I love looking at a single or a small basket of names and just talking about them for a couple weeks. Like, I mean, SoFi, that's what I did to you, right? It was basically the break above 14, I think is what I took, and
Yeah.
kind of sat parked in that all the way up to the 1650, and then tried to do the same thing again somewhere around here, I think, when we got back to the EMA. So I like being able to focus on a single name if I have the opportunity to, or a small basket of names. And, when the market gives those opportunities, kind of like we have now, where there's a small basket of names that are all kind of part of the same theme. A lot of your AI focused names, data centers, that sort of thing. That's kind of the place that interests me most at this point. And then obviously you got to have Roblox on there. You can't forget Roblox.
What about Rivian?
I haven't checked that one in a bit. I gave up. Oh, I should have my own entries marked on here, huh?
I have yours.
I think I hit one here or something.
Yeah, you did. You hit longs there. And then I think you hit longs on like a wick above 15 once.
Here, maybe.
Yeah. Yeah, probably that one. I think that was full port long Toasty.
Cool, guys. Well, I think that's gonna do it for tonight. Definitely appreciate you guys being here. This was a fun one, and yeah, we'll have to see if we can get River involved in a couple more of these beginner lectures to help give a little bit of a different perspective. You know, I can speak for him when I can, but it's not gonna be the same when he delivers it himself.
Yeah, thanks everybody for coming. This was really fun. I enjoyed this, and look forward to Thursday, a little Q&A action.
Yep.
And like Tosi said, get some questions ready, maybe get some charts, maybe have some ideas. I don't exactly know what we're going to do on the Q&A, but bring some trade ideas. I love looking at other people's ideas that
Yeah.
I see on charts. Sometimes it's completely different than what I see. Sometimes I'm dead wrong and I'm like, wow, your chart is better than mine. I'm taking that trade, so bring some ideas, practice a little support and resistance, and ask us, hey, what do you guys think of this level? Like I said, very infrequently will you be bottom ticking, but I talk to a lot of people, and maybe somebody's got a level at 600 on SPY, somebody's got 610, somebody's got 599.90. Well, now as a team we can kind of look at that and say, well, in this 30-cent range I'm not doing anything. We know that's kind of a zone that having those multiple eyes on it, it helps everybody. So bring some of your ideas, bring some of your charts, and let's check them out.
Yeah, I think that's a really good way to put it, River. We'll just try and run it more like a workshop where you guys just bring your charts. We could even maybe do it in VC so you guys can all kind of talk and maybe like present a little bit on what you're looking at and just have a conversation maybe to make it a bit more interactive.
Yep, I like that idea. I like
Cool. Cool. All right. Well, we'll plan for that. And yeah, with that, thanks again, guys, for being here. And we'll see you guys all on Thursday.
Yep. Thank you, everybody. We'll talk to you later.